Long-term investors have been taken for quite the ride over the last 2 months. The ongoing pandemic, which has affected over 2 million people worldwide, has led to unprecedented mitigation measures designed to slow its transmission. But as a side effect, it's also shut down businesses and sent unemployment levels skyrocketing in the US and abroad. After the market had reached all-time highs in February, it didn't take long for the market to drop into bear market territory and eventually only taking 33 days to lose more than 34% of its value. Both represent the quickest and steepest declines in recent history. Yet this record-breaking volatility and stock market crash has also opened the door for investors who are looking for great value opportunities. One such deal that long-term investors may want to consider is Warren Buffett's company Berkshire Hathaway, ticker symbol BRK.B, which is trading at levels that haven't been seen since the fourth quarter of 2017. In this video, I'll discuss 5 reasons why to consider adding Buffett's own company, Berkshire Hathaway, to one's portfolio for building wealth into the foreseeable future. Get ready, you are now entering the Academy. The first reason is that you get Warren Buffett as your portfolio manager. Perhaps the top reason for an investor to buy Berkshire Hathaway shares is that effectively you get the Oracle of Omaha as your investment manager. Warren Buffett has a knack for identifying great value companies and investing in them, sometimes buying them outright. He's also created over $400 billion in value for Berkshire's shareholders over the last 50 years. Many of Buffett's most successful long-term investments were purchased during bear markets or periods of heightened uncertainty as we're experiencing now. So why not invest in Berkshire Hathaway now? The second reason is results. If the Warren Buffett name isn't enough to buy Berkshire Hathaway shares, then perhaps its average annual return will do the trick. According to the company's 2019 shareholder letter, the S&P 500 has averaged an annual return of 10% inclusive of dividends between 1965 and 2019. By comparison, Berkshire Hathaway's per-share market value has delivered a compound annual rate of return of 20.3% over the same time frame, with only 11 years in the negative and 35 years of at least positive double-digit returns. In aggregate, the S&P 500 is up almost 19,800% in 55 years, whereas Berkshire Hathaway stock is up 2.744 million%, which is an amazing accomplishment. The third reason is uninterrupted dividend income. The thing about buying profitable, time-tested businesses with sustainable competitive advantages is that they often pay a dividend. In Berkshire Hathaway's case, approximately 2/3 of its 52 held securities in its portfolio currently pay a dividend. Add up these payouts over the course of the next year, and Berkshire Hathaway is on track to collect about $4.7 billion in dividend income. What's particularly interesting is that Buffett's yield on cost, i.e. its dividend yield based on its initial cost basis, is much higher than you probably realize. With a cost basis for Berkshire's entire portfolio of $110 billion, Buffett is generating a yield on cost of better than 4% each year. In fact, Buffett has held Coca-Cola for such a long period of time that he doubles his money on it every 2 years, based solely on its payout relative to Berkshire's initial cost basis. And due to the fact that Berkshire does not pay dividends to its investors, means that the extra cash that is generated from its holding dividends gets reinvested back into the company, either through share buybacks or cash deposits, which can be distributed through business acquisitions, making its portfolio that much more lucrative. For a Berkshire investor, this effectively means sustained increase in value for their shares over time. The fourth reason to buy Berkshire Hathaway stock is that one is betting on long-term growth of the US and global economy. That's because Buffett's portfolio is unmistakably cyclical in nature. In other words, it does well when the US and global economies are expanding, which occurs far more often than periods of contraction. Buffett's favorite sector is financials, with investments in banks such as Bank of America, US Bancorp, JP Morgan Chase, and Wells Fargo. Although big banks become susceptible to weakness during periods of economic contraction or recessions due to rising loan delinquencies and lower net interest income, they're also absolute money-making machines during periods of economic expansion and have been known to deliver some of the biggest yields to shareholders through dividends and share repurchases. Last but not least, buying into Berkshire Hathaway gives investors exposure to a diverse group of companies that Buffett and his team have acquired over decades. As noted, Buffett will occasionally use his company's cash on hand to acquire entire companies. Over 5 decades, Buffett has gobbled up about 60 businesses from a host of sectors and industries, including energy, insurance, transport, and retail. These buyouts include well-known companies like insurer Geico and railroad operator BNSF. Although Buffett hasn't pulled the trigger on a needle-moving acquisition in 4 years, his track record suggests that when he does, there's a good chance of it being a winning value acquisition for Berkshire Hathaway. How can you invest like Warren Buffett and have the Oracle of Omaha manage your portfolio? Easy. By investing in his company, which in turn invests in multi-billion-dollar companies. In this video, we examine 5 reasons why investing in Berkshire Hathaway is a good idea. Not only do you get the leverage off the knowledge, expertise, and wisdom of one of the greatest investors of all time, but you also get the added benefits of reaping the rewards of such investments. In fact, the 10X Academy channel was created with the wisdom and principles of the great Warren Buffett in mind. By employing strategies mentioned in this channel, which include value investing, diversification, investing in income-producing assets, and reinvesting profits for exponential growth of one's assets, one can begin to build the necessary foundation in building passive income flows that will grow over time, achieving wealth status and beyond. Thank you for watching this video. If you enjoyed watching, don't forget to smash the like button. It will really help out the YouTube algorithm in bringing you more wealth creation strategy videos. And if you haven't done so already, be sure to subscribe to the 10X Academy. And don't forget to turn on the notification bell to be alerted on more passive income strategy videos. This is the 10X Academy.